The Reserve Bank of India Governor Sanjay Malhotra believes that more than inflation, the central bank is concerned about the impact of US President Donald Trump's tariffs on India's growth. As a result, the RBI cut its real GDP forecast for the financial year 2026 to be 6.5% from 6.7% projected earlier. They've also cut the repo rate today by 25 basis points.
Clouded the global economic outlook, exacerbated uncertainties across regions, new headwinds for global growth and inflation. These were only some of the red flags raised by RBI Governor Sanjay Malhotra in his first monetary policy statement of the new financial year. He warned the uncertainties arising out of Trump's tariffs could hit investments in India as well as hurt merchandise exports. The governor also said the tariffs will lead to pressure on the rupee and may impact inflation due to currency depreciation. All these forced the RBI to forecast lower economic growth than its earlier estimates.
You would have noted that the growth projection for the current year has been marked down by 20 basis points relative to our earlier assessment of 6.7% in the February policy. This downward revision essentially reflects the impact of global trade and policy uncertainties, which I had highlighted a little while ago.
RBI's fresh projection for India's GDP growth is more in line with the latest estimates by global institutions and agencies. IMF has forecast 6.5% growth for India in the financial year 2026. OECD's estimate is the lowest among world bodies at 6.4%. Both the World Bank and the Asian Development Bank expect the Indian economy to grow at a faster pace. Morgan Stanley, meanwhile, is the most skeptical of India's growth, having lowered its estimate by 30 to 60 basis points. S&P, Fitch and Moody's have the same estimate, which has now been met by the RBI. As part of its efforts to remedy the uncertainties, RBI has not only slashed repo rate for the second time in as many months, but also shifted its focus to growth, having reined the bolting horse of inflation. It has formally pivoted its stance to accommodative from 3 years of hawkish and later the neutral stance.
In such challenging global economic conditions, the benign inflation outlook and the moderate growth demand that the MPC continues to support growth. Accordingly, the MPC unanimously voted to reduce the policy repo rate by 25 basis points to 6%. Moreover, it also decided to change the stance from neutral to accommodative.
There is some good news as well. The RBI said India has a comparative advantage over other nations on US tariffs and that the impact of tariffs on India would be much less than others. These add to various reports that India could benefit from global trade diversions and the bilateral trade agreement, which is expected to be signed later this year. Bureau Report, Business Today TV.